You may have already seen many articles and videos on people comparing Credit Suisse with Lehman Brothers and the 2008 financial crisis. There are many similarities but many differences as well. Without getting into the too many details of credit default swap ratio or CDS ratio and things like those, we will try to understand the crux of the problem that was there in 2008, the crux of the problem that is there in 2022, how they are similar, what is the difference between the two, and more importantly, can we have a similar market meltdown like in 2008? Let's understand what is the similarity between Lehman Brothers and Credit Suisse. Credit Suisse is a second largest Swiss bank and it has incurred losses in the past 1 year. Uh, I mean losses in range of few billion dollars, and those losses has made sure that there is some issue in the bank. The bank has replaced many CEOs in the past short period of time, and so there is assumed to be some internal problems in the bank. So once there are internal problems in an investment bank of such a large magnitude, like it is 45th largest bank in the world, and it is listed as too big to fail kind of an institution. So once there is a huge problem, there are spurred of losses that is happening. So people are comparing Credit Suisse as an investment bank to a Lehman Brother, uh, the crisis that arose because of the failure of a Lehman Brother. There's, I mean, Lehman Brother filed for bankruptcy in 2008, but Credit Suisse has still not filed for bankruptcy. Only certain parameters like CDS has shot up in such a manner that it has reached to a level where it was there in 2008. I mean, graphs shows that, and that's how the parameter is changing, but that is just one parameter, and I see there's a lot of differences between the issue with Lehman Brothers and Credit Suisse. So now let's understand what are the differences between the two incidents. The 2008 Lehman Brothers incident was a one of its kind. So Lehman Brothers filed for bankruptcy in 2008. The issue was because of the subprime mortgage loans. So I will explain in a very brief what it was. So when an institution or any organization provides any individual a loan, there are chances that that loan will not be paid back. So once an institution has some doubts, what it does is it insures that loan. So if an investor is not able to pay the loan back, the insurer will pay the loan back. A charge of that was 1% in 2008. So then what happens is, prior to 2008 crisis, people or the institution were giving out loans, and those loans were they had doubts. They started to feel that the loan would not come back. So what they did was they insured that loan or transferred that loan to some other banks. They saw that only 1% is the charge. So for 100 crore loan that I'm about to get back, if I pay say 1 crore rupees as loan right now, or 1 crore rupees as a insurance premium, I can secure my 100 crore rupees loan. So once I am doing that, I am on the safe side because I will be insured. um, I know that I can give loan to anybody now, and because I am insured, I don't have any risk. Again, the insurer has no data about whose loan he is insuring. They are only insuring based on certain parameters, like only 2% of the defaulters will happen or 3% of the defaulters will happen. But if everyone defaults on that loan, the person who has insured those loan has to file for bankruptcy. This is what caused Lehman Brothers to file for bankruptcy. The issue was mainly subprime mortgage loans. So bank used to issue loans to anybody and everybody, and those people, once let's say I have issued a loan to a person who I know will not pay me back, and then I go and insure that loan. So what happens is, I'm giving a loan and then insuring it. I know this will not pay back, so I'm just taking the money from the insurer. This chain of events caused the Lehman Brothers to file for bankruptcy. So you have to understand that it was not the Lehman Brother who caused this issue. It's the the rules and the policies at that time that caused this issue, because once I'm giving a loan and I'm insuring that, and the insurer is not doing a due diligence on the person who is going to pay, that caused the whole scenario to go into a chain of effects, and that caused Lehman Brothers to fail. Can Credit Suisse cause 2008 like financial crisis? The short answer is I don't think so. Still, the amount of information and the data that is available in the public domain, I don't think Credit Suisse can trigger off incidents as big as financial crisis of 2008. And there will be chain of effects. So Credit Suisse may have investment in India that they may have to pull off to settle the books or balance sheets in the wherever they had to pay something or things like those. It can also cause certain amount of chain of effects, so it may have lended to some other organization that they may have to pull off, including Indian banks on foreign banks or any other banks. And there will be some ripple effect, similar to, let's say, ILNFS case, where we found that many other institutions had exposure to ILNFS and other such institutions, and they had some bad times, or they had some NPAs and things like those. Similar chain of events can happen with Credit Suisse as well, but I don't see this as one of the incidents like Lehman Brothers, because Lehman Brothers was an issue that was triggered by policies and checks in place, and that caused the Lehman Brothers to file for bankruptcy. And this is an issue with a bank, and that can have ripple effects, but I don't see it as big as the financial crisis that we had in 2008. In the current situation, the governments and the organizations and the authorizing body all have the checks and balance in place, so that this doesn't happen again. There can be some other thing that may happen, but still I think the CDS ratio and the graph that we are seeing is a totally different, and the issue is pertaining to only one bank. It can have chain of effects to other investment banking services providers or even Indian banks to a very small extent. I don't see this chain of events to be similar to Lehman Brother incidents, but I see this as more of an ILNFS problem that was there in India. We had an ILNFS incident, and that sparked lots of chain of events. The Indian banking system had to go through a lot of NPAs and things like those. There were checks and balances in place, and we came out of that event. What are your thoughts about the Credit Suisse event? Share them in comments below.